County of Bruce. Click. Got it. So I'm with the County of Bruce. I'm a business development coordinator with the economic development team. And so we focus on essentially providing consulting and resources to all of our local businesses to help you succeed and thrive. We do offer one-on-one consulting for more custom. We have these training sessions, which are fantastic. And then we have our consulting that is where we can engage with you and really get a better idea of your unique needs and work on a strategy and plan specific for you and your business. So I'm going to share in the chat the link to book a consult with our team, just so you have it. And what I'll note now is that in the follow-up email to this session, I will be sharing any documents or resources that Carrie goes through or shares today, a copy of the slides, and some links to where you can find this recording if you need to visit it afterwards. But that's it. I'm going to hand it back over to you, Carrie.
Thank you very much. So I'm Carrie McMaster, and I do business consulting for a company called Tracon. It's my business, and I'm a business growth and development specialist. I've been working with entrepreneurs for over 20 years. I absolutely love it. And today we're going to be talking about income tax preparation for sole proprietors. So as Amanda said, we are recording the session. You will get a copy of the slide deck, and there has been an update to one of the original handouts, so we'll be providing that. As I'm going through the presentation, I'll ask that you keep your audio off, and if you have any questions, if you could type them into the chat. So the chat, if you're not familiar with where it is, if you just sort of wiggle your mouse at the bottom, you'll see a little speak bubble that says chat. If you click on that on the right-hand side, you'll see the meeting chat, and if you please feel free to type them into the chat. I do monitor it as I'm going through the presentation. When I'm doing the presentation, I will turn off my video so the slides just come through a little quicker and it's easier to see. So I'm going to stop my video now. I'm going to share my screen. And I'm going to pull up the chat. So again, if you have any questions, please feel free to type them into the chat. I will be monitoring go through. So thanks to the Bruce Small Business Office, we're able to bring you the income tax preparation for sole proprietors and partnerships. So if for whatever reason you hopped on and you're a corporation, some of this information is applicable, but corporations actually fill in different forms, and there's a lot more information that you would need other than what's available here. So they're probably going to be offering one for corporations as well, but this one is strictly for sole proprietors and partnerships. Okay, just a quick little disclaimer. The information in this webinar is intended solely for demonstrated purposes only. The numbers and the examples given won't be your numbers, and they may or may not apply to your business. What we're going to be going over is the only additional form you will have to complete in addition to your T1 General, which is the income tax form you're probably familiar with filling in, because you would need to submit that on an annual basis if you had any employment. So we're only going over one additional form as a self-employed individual. In all cases, you really should consult with a professional advisor who is familiar with your factual situation for advice concerning specific matters for your business, because how the answer might be for your business might differ for another business. So I will be able to answer a lot of your questions, but some of them I may refer you to talk to an accountant. Now, the nice thing about accountants is they do offer free 15-minute consultations, or ask if you have just a quick question, they will answer for you. So again, I'm I have 20 years working with partners, the best job in the world. I live in Bancroft, which is probably about 5 hours from you. I have a number of certifications, and I have a little side hustle in the spring and summer that is selling perennials, because I enjoy gardening and I always have extra perennials, so I like to sell those off. Okay, that's about me. Let's take a look at what we're going to be looking at today. So you may or may not be familiar with my business account or your personal account that you can access through Canada Revenue Agency. So I'll be introducing that to you. On my business account, you can also submit HST and payroll remittance to Canada Revenue Agency online. So it's got a lot of great features. I'll be talking about how you would complete this statement of business or professional activity. So just, what over the key 21 and if not, don't worry, you will get it after. I'll also be talking about some of the common income tax errors made by small business, and then how you can measure your performance against other like businesses in the industry across Canada, so you can benchmark your financial performance. So my account you can get with Canada Revenue Agency for your personal information, and you can also set one up for your business. So the My Account is convenient. It's available 24/7 online. It's easy to use. Once you register, you just simply log in with the user ID and password. It's fast. It has up-to-date information, so you can access anything that they have immediately, and it's secure. So this is the different accounts that they offer. So there's the My Account for individuals, and that lets you preview your personal income tax and benefit information and manage your taxes online. So it's really nice if you need to get hold of your notice of assessment, or you want to see what your RRSP limit is, or if you need to track your refund, or you want to change or view your income taxes. All this information, once Canada Revenue Agency has received it, is online for you to look up. You can also set up direct deposits. If Canada Revenue Agency is trying to get in touch with you, they can send you an email, and it has a lot of other features just for your own personal. If you're missing a T4 slip, you can go onto that site and you can see any T4s that have ever been issued to you. The My Business account provides an opportunity to interact electronically with Canada Revenue Agency on your different various business accounts. So if you have a business number and you're collecting HST, if you have employees and are submitting payroll deductions, if you're incorporated, or if you're importing or exporting, you can get all the information you need through the My Business account. So how you would set up these two accounts is you'd go to the link at the bottom of the screen, and again, you will be receiving the slide deck, so you'll have all these links available to you. You can set up My Account here for personal taxes to find out what tax credits are available to you. If you're eligible for CCB, which is the child benefit, or any COVID benefits. If you're not registered, you just click on how to register for My Account, and I'll go through the steps. And then once you're registered, you just click on My Account. If you're wanting to set up your business, you would go to Register My Business Account. You would need a business number, so you would need to collect HST and or payroll, or have a business number. So having said that, can you type into the chat if you do not have a business number? Just put do not have. And also, could you type into the chat if you are not collecting HST? So just click in not collecting HST, because there may be a few things around the HST you need to know. But that's about the My Business account. You can also have an employee or an accountant, so a representative of your company, also sign up for this so they can access your accounts if they need to. Okay, so there is one person not collecting HST. So there are some products and some services that are HST exempt, but most services and most products, you do collect HST on once you have reached that $30,000 threshold. So the $30,000 threshold is once you've accumulated in 4 consecutive quarters or any 12-month period, your sales have reached 30,000. So it's not in a calendar year, it's any 12-month period or within that time frame, your sales reach $30,000. From that point on, you have to register with Canada Revenue Agency, get a business number, and start collecting HST. A couple of reasons why you might want to register and get your business number with Canada Revenue Agency and start collecting HST right from the start is if you want to be able to deduct any HST you paid out on products and services that you purchase for your business, you need to be collecting HST. So what that looks like is you collect $500 in HST, and in the same time frame, you purchase products or equipment, and you paid out $250 in HST. You can deduct that $250 from the $500 you collected, so you would only have to remit $250. So you're basically getting back any HST that you paid out, and they're called input tax credits. So that might be one reason you want to collect HST if you have a product or service where you would have to. You also might want to, just to give your business a little more credibility, especially if you're doing business to business. People are used to paying the HST, and if you're doing business to business, if you're not collecting HST, one would assume that you haven't made this $30,000 threshold, so sales of $30,000 or more within a 12-month period, or you're a new business. So it gives your business just a bit more credibility. They don't really know whether you're a new business or not. And also, it just helps. For example, say you are a hairstylist, and when you first start out, you haven't made this $30,000 threshold and you're not charging HST. And then maybe 6 months into your business, you make that $30,000 in sales, you have to register for your HST, and now you have to charge the HST. So your client's bill just went up 13%. So as I said, people are used to paying the HST. My recommendation, if you do have a taxable product or service, I personally feel it's good to start charging the HST right from the start, get your business number, but it's completely up to you. Okay, so setting up your business account. The first thing is you would need to know your social insurance number, your date of birth, your current postal code, and enter an amount that's found on an income tax return. So what you need to have is your last 2 income tax returns with you. And as you're registering, a question will pop up. What is the amount online? And they'll give you a line number. You would go to your income tax return, find that line number, and then type in that amount. It just verifies with them that you have that income tax, and chances are it's you. You would create a user ID and a password, and then you'd enroll in the mandatory multi-factor authentication. So what that is you would provide them with a cell phone number so they could text you a verification code, or you would provide them with an email address so they could email you the verification code. So they try to put in a few safeguards to make sure you are who you say you are. And then again, if you're registering for the My Business account, you would need the business number that you get from Canada Revenue Agency. This is not to be confused with the business number you would have gotten when you registered your company name. You register that with the province, and CRA is federal. So you would need a business number from Canada Revenue Agency, again, if you have the following accounts. So if you collect HST or need to collect HST, if you have employees and need to submit payroll deductions, if you're incorporated, or if you're importing or exporting, you would need a business number. So now getting into the taxes, I have a question for you. Do you find just thinking about doing your income tax stressful? If you do, you're not alone. 45%, almost half of Canadians polled, admitted that tackling tax return preparation themselves generates a moderate to high degree of stress. This contributes to a continuing trend in Canada to delay tax filing to the last minute and not optimizing potential tax write-offs. So the fact that you're here is going to decrease your stress level doing not only your business taxes, but your personal taxes as well. So I'm going to share with you some software that I use to remit my personal and business income tax at the same time. It's going to make filling in the form I'm going through so much easier. So there are a number of programs that are CRA certified. The one I use is the one highlighted here. It's called GenuTax Standard for Windows. It is a free program. At the end, it will ask you, do you want to make a donation, but you do not have to. So all these softwares here are approved by Canada Revenue Agency, and I use the GenuTax. I've been using it for years and years and years. You can do up to 10 different income taxes. So whether you do 10 people or you do your business or do, a couple of years, maybe you're behind on your income taxes, you can do that all through GenuTax. What I love about it is I'm self-employed, my husband's self-employed. I can do both our personal income tax and both our business income tax simultaneously. So what happens is it just asks you whose income tax you're doing. It will ask you for certain information, your social insurance number, basically any information that you would be providing Canada Revenue Agency on your personal income tax and your business income tax. When I'm doing any information or inputting any information for my husband's personal or business, the screen will be blue. And if I'm entering any information for my personal or business, the screen will be pink. So basically, all it does from start to finish is ask you a series of questions. You answer the series of questions honestly, and at the end, it will have completed your personal and business income tax, which then you can submit online and find out your notice of assessment immediately. So whether you get money back or if you need to pay income tax. It will also let you know whether you're eligible for any of the Ontario Trillium benefits or any HST programs that you might be eligible for. As you're going through and answering the question, it automatically knows what programs that you would be eligible for based on the information that you input. So you don't have to try to think, oh my goodness, am I eligible for this? The other nice benefit is if you're answering one of the questions and you're just not clear on what they're asking, there's a little eye in a circle. You can click on that and it will take you to the Canada Revenue Agency document that will explain what they're looking for in that section more clearly. So it's absolutely brilliant, and it really helps you do your personal and or business income tax without very much stress at all. So what you need before you sort of started in on the program is all your documentation that you would normally have or submit to an accountant when you're doing your personal or business income tax. So you would need to have the notice of assessment from your previous tax return. You may have a copy of that in your file, or you may be able to access that through the My Individual program that I just introduced you to. You can get all your notice of assessments online from that Canada Revenue Agency portal. You would need your income tax or T4 slips, T5 slips, etc. The nice thing about the program is anything that was sent to you has to be sent to Canada Revenue Agency as well. And as you're going through the process in filling out the documents, it will ask you, do you want to link your CRA file to this so we can download all that information so you don't have to input it yourself? And if you are set up for that and you click yes, it automatically populates any T4 information, any T5 information, any RRSP contribution information, and so on. You would also need to have any additional records of any income, such as your self-employment income. If you had any tax receipts, including charitable donations, any childcare, any monthly transit passes, and medical expenses. So, for example, prescriptions, dental appointments, optometrist appointments, that sort of thing. If you have a home buyers and or lifelong learning plan and you've made repayments to those, any information on that, plus any information on any and all of your self-employed expenses. So again, if I'm going too fast or you need to ask any questions, please let me know in the chat. As a sole proprietor, you are reporting your self-employment income on a calendar basis. So the calendar year that you would be reporting for now is 2022. So your self-employment income reporting period would be January 1st, 2022 to December 31st, 2022. If you're a new business, you may have started, say, your business May 16th. That can be in the form of you made your first sale, or that's when you registered your business, or that's when you made the first purchase for your business. So if you're a new business, you'll have to figure out what your start date is, but in most cases, you'll be January 1st to December 31st. A couple of dates you should be familiar with. The net file opens sometime in February, so I can tell you that it is now open. So if you went to GenuTax and wanted to do a net file, you could. Deadlines you should be aware of is for your personal income tax, it's April 30th, but because that falls on a Sunday, they've moved it to May 1st. For self-employment, your deadline to fill in that information is June 15th. However, taxes are owed by April 30th if you owe any taxes. Now, I always find this a little interesting because usually one would fill in their personal and business income taxes at the same time to determine whether or not you owe money or are getting a refund. So I always try to get mine done by the end of April. Not filing your tax return by the deadline may result in you having to pay interest, fees, or penalties. And these interest, fees, and penalties are not deductible. So it can actually end up costing you a lot of money if you don't file by the deadlines. So as I said, you're probably familiar with your T1 general, that is the personal income tax and benefit return you would fill in every year for income tax purposes. On page 3 of this return is where they start asking you questions about your income, where you have to put in T4 information and so on. On this form, you may have noticed that 3/4 of the way down is where you would put self-employment income, if you have it. So in 2022, if you have self-employment income, the form that I will be going over is where it's going to calculate what your gross income is and what your net income is, and you would fill that in your personal income statement, or if you're doing it through GenU tax, it would automatically be populated. So I haven't been able to change this slide because as of last Friday, the 2022 guide was not available, but I can tell you when I went online just within the last hour, the 2022 guide is available, and I will be showing you that guide, which I'm actually going to show you now. So what I like to do is I usually download this guide as a PDF. It's 112 pages, and I will be going over this guide with you at a very high level. So if you want more details on what is in this guide, you'll want to download the guide, and there will be a link for you. So this guide on the page, next page, is for sole proprietors and partnerships. So if you are a sole proprietor and partnership, you don't have to read this guide from start to finish, but you should be aware of what is in it, and you will need to reference it from time to time. On page 3 it tells you what's new for 2022. So what I'm going to focus on here is immediate expensing. So the Government of Canada introduced a temporary immediate expensing initiative for certain property. So this is capital cost items. A capital cost item is any one item that has a value of $500 or more. Usually capital cost items or capital assets are depreciated over a period of time. But as of last year, there's a new temporary initiative or incentive that allows you to write off some capital assets 100% that you purchased in 2022. So I'll be going over that. It also has more information that isn't a lot quite often for most businesses. It'll talk about government-assisted programs for self-employment if you received any of that. It talks about automobile deduction limits. Again, if you're using the online software, all this information is programmed into that software, so you don't need to read up on any of these details. You just need to answer the questions that are being asked honestly, and you won't have any problem with this at all. All the information you put in will go to the appropriate forms on the appropriate lines. So what I want to show you next is, depending on the type of business you're in, whether you're a business, a professional, or commission person, if you're farming or if you're fishing, it would determine which form you would need to complete. So here's the breakdown. If you are a business or professional, you would fill in Form 2125. So a business is anyone that has a product or a service. If they're in the trades, if they're manufacturing, if they're in daycare, or a commissioned salesperson such as a real estate agent. A professional would be considered a medical doctor, dentist, lawyer, accountant, veterinarian, chiropractor, those sorts of professions. If you are in farming, you would fill in the Form 2042. So if you have livestock or poultry, if you're tree farming, you're growing fruit, beekeeping, have a market garden, a nursery, greenhouse, hydroponics, or feedlot, that's where you make your money from. You would be classified as farming. And if you're fishing, you would fill in Form 2121. And this is if you catch any of these sorts of aquatic produce or products. So what I'd like to know is if you are a professional, please type in professional to the chat. If you are farming, please type in farming into the chat. And if you are making your self-employment living through fishing, type fishing into the chat. I just want to see how many identified professionals, farming, and fishing businesses we have in the group today. I will generally be going over Form 2125. This is for businesses and professionals, though I will also talk about the farming and fishing where the forms differ. So we'll be talking about reporting business income for all those areas, reporting cost of goods sold if you have them, business reporting expenses, calculating business use of home expenses, calculating capital cost allowance, and also calculating motor vehicle expenses. So Gemma, you wrote in professional. Could you let me know what profession you're in, please? Business rental income, can you also let me know what sort of business that is? I'm not quite clear, so I just want to. Immigration consultant, that wouldn't be classified as a professional. You would be classified as a business offering a service. So just so you know. A graphic designer, yes. Unless you're sort of a medical doctor, you're probably going to be a business. But if you fall under chiropractor, dentist, those sorts of professions, and again, you can go into that guide to find anything more about, you know, what is classified as a professional. I will also be showing you another area in that guide where you can look. So landlord rental, you'll be providing a service, rent our cottage on Airbnb. So that is self-employment income because you're providing a service on Airbnb. So that would be self-employment as far as I'm aware. It could be rental income on your property. You might want to talk to an accountant. If you want to be able to deduct any expenses for that, you would have to register as a business. So then it would be self-employment. So you might want to talk to either Amanda or one of her associates just to confirm whether or not you should be set up as a business or not. The legal realm, that's a good question, Gemma. Maybe you want to talk to an accountant about that and just ask for further clarification. When I go into the professional document, we can look at that. So I'm going to just see in a minute if that falls under professional and immigration consultant. So I'm going to type that in and let you know for sure. Okay, let's see what else we have. Alrighty. So usually where people make their biggest mistakes with regards to self-employment is calculating the business use of home, capital cost allowance, and their motor vehicle expenses. So I will be covering that in detail. Okay, moving on to the form. This is the first part everybody would have to fill in. You'd have to put in your name, your social insurance number, because as a sole proprietor or a partnership, you and your business are one entity, so they want to be able to match this business self-employment form with your personal income tax. You'd put in your business number and then your business number if you have one. So the business number it's referring to here is the business number you would have gotten from Canada Revenue Agency if you're collecting HST or if you're collecting or if you have employees. You'd put in your business address and your city, province, and postal code. Then it's going to ask what period are you claiming for. So you would put in your date, probably January 1st to December 31st, but then again, if you're a new business, your first date of business for 2022 might be something other than January 1st. Was this your last year of business? Hopefully you're clicking no. and then the main product or service that you're offering. So you would put in what your main product or service is, and then you would go to the document 4002, which I will be popping over to in a sec, to put in your industry code. So your industry code is going to be, first I'm going to type in immigration consultant and see if something comes up there, because I saw that as a question. I can go to the three dots here and just do a find. Immigration, so it doesn't seem to come up. What I'm going to do now is just go to industry code. And it does have a couple of references. It has 6. I know I want to go near the end. Oops. Let me just go back here. I think it's around page 106. So you'll need to find out what your industry code is for your business. And capital cost. Sorry, they've just changed this around just a little bit. Okay, where is it here? Sorry, I'm just gonna. Okay, so they have changed this on me. As I said, this is just a new form that came, or a new publication that came out. They used to have a chapter that said it was an appendix for industry codes. So I'm just going to type that in again just to see if I can't find where you're going to get that information, because obviously they've changed it. Okay, they are no longer giving you that information. They're wanting you to look it up. So apparently now you have to look up the code. They used to in last year's document, which I built this on, they did provide you with industry codes in this paperwork. So what I'm going to do is just go here now so you can see what your industry code is. So it's called what's a North American Industry Classification System. So you're going to go to this website. This is new information. Okay, so the NAICS Canada 2020 version, you're going to find your industry code. So what are we going to do here? This is very interesting. And they see that they've just updated their documents as of this week. So what you would need to do is determine what sector you're in. So if you're a professional, you would be in sector 54, and it would give you all the different classifications for professionals. And this is what they're considering professionals. So legal, accounting, architectural, computer systems, design, and relative services, other professionals. So you would have to find the code that matches yours. If I was to go back here and I do consulting, so I would go probably to management of companies or administrative support. I think what I would do is probably go to management of companies and enterprises. click on the codes and try to find the code that was as closest to mine. And as you can see here, you're having to click through, click through, click through. This never used to be the case. You used to be able to go right in and find your company code, which was a lot easier. So unfortunately, they don't offer that anymore. And you will have to go into this document and click through to find your code. Another way that might be easier is I would type in NAICS code for business consultant. And chances are the code would come up, which it does, 54161, and that is the code that I would use. If I needed to put in a longer code, if it was a 6-digit code, then I would use 541611. Does anybody want to type in their business just to let me know, and I'll look up your code really quickly to see if this will work? So I'm going to do for property rental. And again, the codes will come up if you put in NAICS code 4 and then your industry, graphic design. Thank you. So this would be your code here, 541431. You would be a graphic design service, and you're going to have to apparently find your own code now, which they used to provide that in that book. So what you would do is you would put that into your industry code in here. This is a form that they said, go to this guide. The guide's going to tell you to look up the code yourself. As I said, they used to provide it. Okay, let's move on. Let's not spend any more time there. I think you get what you have to do. Okay, the accounting method is going to be, for most of you, accrual, unless you're in commission sales. Commission sales people are the only people that can use the cash method of accrual. I think the reason for this is if you're a real estate agent and you get commissions on sales, let's see you put the deal together in February, but it doesn't close to November. That deal could fall apart between February and November. So you would just claim the cash that you got from the sale of that property. So the commission that you earned on selling that property once the property is closed, which would be in November. So that's when you would record the sale, not the month that you wrote up the contract. The accrual method is where you record the exact date that's on the invoice that you provide or on the expense receipt that you would have received. So it actually records the sale or the expense the exact day that it happened. The next area is your tax shelter identification. Now, chances are you're not going to have a tax shelter unless your business has sold a piece of business property and you've made a profit on that. Usually it has to do with the sale of buildings or land, so most new businesses would not have that. With regards to a partnership business number, you would not have a partnership business number unless you had a partnership that had revenues and or expenses that exceeded $2 million. So chances are most partnerships that have exceeded $2 million in sales or expenses are incorporated. So I wouldn't worry about that. Any of you who are partnerships, you likely won't have that information. Yes, you will be getting a copy of the recording. Okay, the only other part you complete in part one is the name and address of the person or firm who is preparing this information. If you're doing it yourself, you would put your name, obviously, and if somebody else was doing it, they'd put their name. The second part of the form would be that you would put in any internet business activities or any URLs for any business websites that you may have. So whether it's a website that you have for your business or whether it's a eBay site or it's an Etsy site or Amazon or any auction sites, wherever you can make an appointment, purchase an article, get contact information, you need to provide those business URLs. The next section is where you're going to claim your business income. So this is part 3A and part 3B. So if you're a business, you would complete part 3A. So that could be commissions or businesses. And part 3B is if you're a professional. So for example, a chiropractor, a doctor, and so forth. When you're issuing or when you're recording your sales, you usually record the invoice amount, and that would be your sales, and that would usually include HST as well. So that's what you would put on line 3A. Any gross sales or commissions or fees that your company brought in, including HST, you would put that on 3A. From that, on line 3B, you can deduct any HST that you've collected to be remitted, any provincial sales tax you may have collected from other provinces, if applicable, any returns, allowances, or discounts. So what returns, allowances, and discounts are? Returns are if somebody returned merchandise and you gave them, they returned a product and you gave them a refund for the amount of that purchase. So most companies would record that in a ledger or in an account column called returns. I actually just take it from my sales and bracket it. That way I know it's a return. My business, I don't have return allowances or discounts, so I don't need to worry about that. But if you're a business where you may have returns, you might want to have a separate column to document any returns so you can deduct them from your income at the end of the year. Allowances would be an amount of discounts you might give to a dissatisfied customer. So maybe you're in a business and you perform a service or you performed a job and they are unhappy and say, look, I'll discount your bill 5% or I'll give you an allowance of 5% for this. And you would record that allowance of the money that you refunded to them. And again, you would discount it under line 3B. And then discounts are usually if you give a discount for prompt or advance payment. So for example, and I'm going to type it into the chat, you might have a payment term that might be 2% 10, net 30. So what that means is a lot of businesses will give net 30-day terms, which means they want the individual to pay that invoice within 30 days of the date of the invoice. But for cash flow, people sometimes, and that should be 2%, not 20%. So 2% 10 net 30 means they want you to pay the bill within 30 days. But if you pay it within 10 days, you can deduct 2% of the bill. So it gives them a little incentive to pay early. Again, I'm just going to type it in correctly. 2% 10 net 30. And that helps you with your cash flow to give some incentive to customers to pay a little earlier than the 30 days. Okay, once you've put in all your HST and all your allowable adjustments, you deduct that from line 3A, which in this example gives us $34,000. So the $34,000, if you were to calculate 13% on top of that, that would be the $8,320. So all we're doing is taking the HST off this example that we are remitting to Canada Revenue Agency. Now, some businesses can use what's called the quick method of accounting. That is usually really only good for companies that have a lot of products that they're selling, and they might want to use the quick method of accounting. I don't know anybody who uses it, but if you're interested, again, if it's a business that purchases a lot of goods for resale, the quick method might be the method that you want to use, and this is the form that you would look that up. On line 3G, you're just going to put the adjusted gross sales, and we'd continue on to the next part. So most of you probably are a business or a service would complete 3A, but for those of you who are professional, you have the same information. The only difference would be if you had any work in progress. So work in progress is usually they've given you money up front and you're still doing work, but they haven't actually had that work done. It's referred to work in progress. It's probably usually at the start of the year. They may have paid you a lump sum in November or December, and you might be doing the work up until the end of March. So you really wouldn't have earned any of that money from January to March 2023. So that would be work in progress, and you would exclude that on this. But if you want to know more information, again, you can refer to the guide T4002, which is where you're going to find all the details you need. Once you determine that, you're going to drop down the last amount on the previous part. So what you'll find is every time you go to a different part, you'll have to carry the last number down to the next part. So in this particular example, our adjusted gross sales from the previous area was $64,000. Any reserves deducted for last year, again, reserves would come from things like if your company owned land or buildings and you sold those land or buildings and you got a capital gain, you could put that in here, but chances are you won't have that your first year of business. But you may have other income. So in this example, we have received a Starter Company Plus grant in the amount of $5,000. But it could be a COVID-related measure that you received. It could be a different grant maybe that you received for your business. It may be you recovered a bad debt for your business. Maybe your business won a prize, so you need to claim the amount of that prize as other income. So any other income that you have received for your business, maybe you rented out some of your tools of the trade, any other income you would put on this line. In this example, again, we just received the Starter Company Plus grant, and we put that in at $5,000. Add that to our gross sales, and it now gives us a new gross business or professional income. So this is where we're going to get the number to fill into our personal income tax. So remember on page 3 of our personal income tax, we needed to put our gross business or professional income, so that would just get added to our personal income tax. Now, again, if you're using any one of these programs, this form will automatically be populated for you. Just so you know what the difference is in reporting income for farmers or fishing, these are the different income categories you might have for farming. And these are the different income categories you might have for fishing. Okay, the next area, parts 3D, 4, and 5, is where we're going to start claiming our expenses from our business. So if you're collecting HST, because you can use any HST that you paid out on business expenses, you would not include them in these expenses that you're claiming. However, if you're not collecting HST, the HST that you did pay out, you can claim as a business expense. So just know if you're collecting HST, you will not include HST here. And if you aren't collecting HST, you will include the HST here. So some of you may have what are called cost of goods sold. And again, you need to carry the previous balance forward, which we did on line 3Q. So cost of goods sold are if you're purchasing products for resale, or you're purchasing items to make items for resale. So what you need to do every year is take an opening inventory. In this example, we're a new business. We bought a lot of product to sell for the year, and our opening inventory was $24,000. Throughout the year, we made a number of purchases, so we would record all those purchases in our accounting, and we can see at the end of the year, we purchased $12,250. Now, we didn't have direct wage costs or subcontracts, so a direct wage cost would be if you're making cabinetry, and you're purchasing all the wood and everything, and you've hired somebody to just build that cabinetry for you, those would be direct wage costs for that particular product. You may not go that route. You might have or subcontract another company to build things for you, and that's where you would put those charges. So direct wages and subcontracts are pertaining to any cost of goods sold that you're putting together. Other costs would be any other costs that don't fit in categories. What you would do is you'd add up your starting inventory, your purchases, and any other costs you would have. In this example, we have $36,250. And then we need to take at the end of the year a closing inventory, and this includes any raw materials or goods in process. And in this example, at the end of the year, December 31st, we had $28,500 worth of inventory. We deduct that from our the amount from above. That leads $7,750 that we can claim as an expense for cost of goods sold in 2022. We deduct that from our gross business income, showing us a gross profit or loss. In this case, because it's a positive value, we have a gross profit of $61,250. We bring that number forward. Just a reminder, you need to take an opening inventory and a closing inventory every year. Your closing inventory for 2022 will be your opening inventory for 2023. We take the amount on line 8519, bring it forward to line 4A as our gross business or professional income. Now we get to start deducting any business expenses. So these business expense categories are the ones that Canada Revenue Agency has classified. So usually when I'm setting up my books, whether it's in Wave or Excel spreadsheet, I will use these categories because then it just makes filling in this form so much easier. I can just look at the end of the year, find out what my year-to-date totals are at December 31st, and pop in those numbers. Some companies will break down their advertising into subcategories. So they might have advertising, but they might have digital advertising or print advertising. They might break that down further into social media advertising, website, and so on. But again, if you classify it under advertising and just have subcategories, at the end, you'll see exactly how much you paid in total for advertising. So I'm just going to go over this super quick because you can go to the document 4002 and find out all the details, but I'll just give you a quick overview of what these expenses are. So advertising basically is anything that has your company name on it. You can claim that 100%. Meals and entertainment, you would normally claim at 50%. There's some businesses and some instances that you can claim more, so you'll need to read up on that section. So you'll want to highlight that to look into a bit further, but generally it's 50%. Bad debts are if you did a job in February, sent out your invoice, and December 31st, for whatever reason, felt you weren't going to get paid, you could off as a bad debt. So basically on paper, it looks like an in-out transaction. You have recorded it as a sale, but now you've recorded it as an expense. The taxes on that sale you did not get paid. However, if in the next year or even the year after you did get paid for that bad debt, you would have to claim it as other income. Insurance here is insurance for your business only, not business use of home expense or motor vehicle, strictly business insurance. Interest and bank charges, again, on business credit cards, business loans, or business bank accounts. Business taxes, licenses, or memberships when you register your business, join an association, or if you're a business that requires additional licensing, you would claim it here. Office expenses is anything that has a value of $500 or less that you use within your office. I don't know why they say office stationery. I always put office stationery in expenses, so I just use this line for supplies. So for example, supplies could be, if you're in a window cleaning business, it could be the solutions that you use. It could be your squeegees and mops and things like that. Where are we here? Professional fees. This is our accountant. Here, management and administration fees. Some people pay administration fee or a management fee to the broker. If you're using PayPal or Stripe, there's administration fees for those. Rent would be if you rent a separate office space, or if you rent a storefront or a storage unit that's not on your property. Repairs and maintenance, this is for your equipment. This doesn't have anything to do with your motor vehicle. I'll talk about that later. If you have employees, salaries, wages, benefits, so CPP contributions, EI contributions, WSIB, that sort of thing. Property taxes, again, if you have a property other than your home, so you've rented somewhere and you're paying property taxes there. Travel expenses could be if you rent a car, train, bus, for business purposes, so you can only claim the amount that's business purposes. Utilities, heat and hydro, again, this is if you rent a separate location. Fuel costs, this is if you have equipment that run or operate using some sort of fuel. This is not the fuel for your motor vehicle. And any delivery, freight, or express that you're shipping or anything that you've received, you can claim here. If it is a shipping fee for cost of goods sold, I usually put that under cost of goods sold. I wouldn't put it as a separate delivery fee, because I want to know exactly what my cost of goods sold is. And if I'm paying shipping or delivery on products or items that I'm reselling, I put that into cost of goods sold. Motor vehicle expenses. This section and the next section here, capital cost allowance, there's separate forms that you have to complete within this document that I will be going over with you in a minute. So we have to complete those forms before we can complete part 4. So let's show you what farming and fishing expenses. You'll see if you're farming, there are certain expenses you can claim that a business wouldn't have, such as containers and twine for the seed, so on. And in fishing, you would have different expenses as well. So you could write off salt and bait and ice and fishing gear and that sort of thing. Okay, the next section you may want to take notes. I'm going to talk about motor vehicle expenses, the way the revenue agency would like to claim them. So hopefully you have been claiming them this way. If not, you'll want to start doing this and see if you can't do it for 2022. So what you need to do is the first day of business, you need to take an odometer reading. Okay, so in most cases that would be January 1st, and you would take an odometer reading December 31st. So the first day of business and the last day of business, you want to take an odometer reading on vehicle. Now you only have to do that if you're using your vehicle for person and for business. If you've purchased a separate vehicle for business purpose only, you can write up everything 100%. If you're using your personal vehicle for business as well, this is what you need to do. So you'll take an odometer reading the first day of business, January 1st in most cases, and the last day of business, December 31st. You will keep track of all your fuel, oil, repairs, insurance, registrations, any interest if you have a loan on that vehicle, any leasing cost if you lease that vehicle, and electricity if you have a zero emissions vehicle. So you need to keep all your expenses receipts. In the meantime, you also need to be tracking any business related travel. So whether you do this manually using a vehicle log that you might, keep in your car, or whether you use a vehicle log app, you need to all your business travel. So what you would need for sure is the date.
Harry, your audio is kind of going in and out a little bit. I'm not sure if there's a way to alter that.
Yeah, it should correct itself momentarily. So I'll jump over any section where it started cutting out. So what section was that?
Just kind of at the beginning of this section, but I think you can keep going. It should be fine.
Okay, does it seem to be fine now?
Yes, it seems to be okay now.
Okay, it sometimes does that. So if it does it again, just type in the chat audio and I'll know to just slow down for a minute and it will correct itself.
Okay, thank you.
All righty. Okay, so vehicle log. What you need to track there is your business kilometers. So the date of the trip, the destination, the reason for the trip, and the total round trip kilometers. So for example, if I was to go to the bank today to deposit a check, that is a business check. I would put in March 13th, destination, Bank of Nova Scotia, reason, make a deposit, total kilometers 35. If I was to travel, say tomorrow I'm doing an in-person presentation, I'd put March 14th, destination Peterborough, reason in-person workshop for Peterborough small business, and 300 kilometers for my round trip. So what I want to be able to do is know how many kilometers that car traveled within the year, and then out of those kilometers, how many kilometers I traveled for business purposes. Once I know that information, I can fill chart 8 of the. This is the form we've been going through. So from my vehicle log, I would put in on line 1, which was 6,200 kilometers. On line 2, I would put the total kilometers that vehicle drove in the year, in this example, 26,000. Underneath that, I would put in all the expenses I had for that vehicle for 2022. So fuel and oil, interest, I'll show you chart B in a minute. That is if you have a loan for your vehicle. Your vehicle insurance, any license and registration, any maintenance and repair. If you're leasing the vehicle, you have to fill in chart C. And if you have electricity for a zero emissions vehicle, that's where you would put the amount in. And then any other expenses that don't fit into any of those categories. In this example, I'm not leasing and I don't have a loan. So I'd add up all the amounts from line 3 to line 11, which gives me expenses for the year of $13,108. I would then use the following formula. And again, when you use the online software, you just have to put in the amount. It automatically calculates everything for you. But if you're doing it manually, you would take the amount on line 1, divide it by the amount on line 2, and multiply it by the amount on line 12, which on line 13 gives me $3,125.75. If I had any business parking fees or if I purchased any supplementary business income, I could include that. In this example, I don't. So this is the amount I can claim for my motor vehicle expenses under Part 4, which I will get to just momentarily. I just want to show you part chart B and part chart 4, and then we'll put that amount in Part 4. So again, there's calculations. If you have a vehicle that you're leasing, you'd have to fill in chart B. If you have a loan, if you have a loan and are paying interest on that loan for your vehicle, this is where you would calculate that, because you can only claim a certain portion of that. And the same with regards to leasing, you can only claim a portion, so you would have to fill in chart C. If you had any of those amounts, you'd put them on line 4 and line, but again, in this example, we don't. So the allowable motor vehicle expense we have for this example is $3,125.75. We put that on line 4T of part 4. So that's where we put our motor vehicle expenses. Next, we're going to calculate capital cost allowance. So if you recall, this is one of the areas that has changed temporarily for 2022. When they're going to change it back, they haven't made any announcements, but I'm going to give you the down and dirty version. And if you want more information, you can go to the guide 4002. So capital cost items, again, just for a refresher, is things like property, buildings, furniture you use in your self-employment activities. You can also bring in property already own. So what that looks like is if you have a car and you're using it both for business and personal, you can write off part of that capital cost allowance for that vehicle. So you can claim some of that vehicle as a capital expense, and I'll show you how to do that in a minute. Farming or fishing, again, around pages 66, 67. It's a new guide. I haven't had time to change the slides because the guide just came out this morning. Or fishing, there is a section you might want to refer to in that guide. Most commonly used capital cost allowance classes are 10 and 8. So 8 is any property that you use in your business that's not included in any other class, and class 10 is usually motor vehicle expenses. If you have things that you're not sure about, again, look at the guide 4002 and you'll be able to determine what the class number is for that particular piece of equipment. So in area B, we're bringing in equipment additions that we purchased in 2022. So this particular example, they had a number of different pieces of equipment that had a value of $500 or more. So from the equipment list that we would have, we just added all those equipment together and it ended up being $15,000. Now, if you're using any of that equipment for personal, you could only claim the business part of that equipment. In this particular scenario, we're using it 100% for business, so we can claim the full 100% of that capital cost allowance. So that's area B. We're going to bring that information up to area A. First line I want to tell you about is the class number 10, and this is where we're going to bring in our motor vehicle expense. So we don't have to put it in area B because it wasn't something we purchased in 2022. It's our vehicle that we had. It's a 2016 vehicle. I talked to my mechanic. He gave me a fair market value of $25,000, which I would have had him put into writing. So as a vehicle, a used vehicle or used equipment that you're bringing in that isn't new, it's just something you had already, you would have it as an undepreciated capital cost at the start of the year. So it's not new equipment. As you can see in column 3, this is cost of any additions that we brought in 2022. And in this example, we had a number of pieces of equipment, so we're bringing those in at $15,000. So I'm not going to explain all the other columns there if you sell items, which most businesses don't sell items, but if you did, you would have to put any proceeds in column line 5 and 6. But in this scenario, we've just brought in new equipment. So the vehicle that we brought in, all we need to do is take that $25,000 and put it under column 7. And that's all we have to do for the first section of this form. It does have more sections, which I'll get to in a minute. For any new, we would put it in column 3. We would put it in column 4, 7, 8, and 9. So again, if you're doing it online, the program, if you're using online software, the program would automatically put it in all the columns that it would need to go in. So this is an example I did through the program, and this is the columns it filled in. So these are the columns that you would need to fill in as well. If you happen to bring in buildings or equipment, you would add them in area C. Equipment, if you sold any equipment or buildings, you would have to complete area D and E, but chances are you haven't sold anything, and it's very rare that new businesses bring in buildings, but you might. I don't know your business, so this is why you would have to sort of read this section for your business. And then if your business purchased any land or disposed of any land, you would fill in area F. Now, if you recall, we completed areas 1 to 8. You'll get these copies so you can see exactly what I did. If you want to read up more, you can go to that guide. But I'm just going to flip over to the next columns that you would have to complete. So that $25,000 we would bring across to line 12. And then in line 16, if you recall when we were filling in what percentage or how much we could claim for business use of vehicles, we had 6,000 of business kilometers against 26,000 the business or the total amount that the car drove. That represents about 24%. So what this calculation has done is it's taken about 24% of the $25,000 that we can write off, because we can't write off any of the personal part. We can only write off the business part. Because this was an asset that we had previous, it's not a brand new asset to us in 2022, we can't write it off 100%. We have to write it off at the class rate specified in the guide, and in this particular example, because it's a class 10, it's written off at 30%. So I can write off $1,788.46. Now, you used to be able for class 8, write it off at 20%, and you'd have to do this over a number of years. But because there was new legislation last year, for this year, for 2022, it can write it off 100%. So we don't have to, write it off over the next 5 years. We can of that write-off in 2022. So in this example, we can write off all that equipment, all $15,000 of it in 2022. I add up all the amounts on line 18, giving us $16,788.46 that we can write off in 2022 as a capital allowance. I've added that to the expense portion, part 4 of my business income tax. So you can see these are all the eligible write-offs that I can write off in 22. It totals almost $35,000, which I deduct from my gross, giving me a net income of $26,347. And that is the amount I am going to claim on my part 5, and then I'm going to carry that information through to my personal once I've completed part 5. So I'm going to carry forward that amount on line 5A. Now, if you are a partnership, you would only claim the percentage of the partnership that you owned. So because I'm a sole proprietor, 100% is what I would put here, which I have. But if it was a partnership, I would only put 50% of the amount, because my partner would be claiming the other Okay, so I'm just going to slow down and go over this again. Line 5A, I brought down from the previous section. Sole proprietor, I can claim that 100%. As a business, as a partner, I would only claim 2% of partners that I own. So if it was a 50-50 partnership, I would claim 50% of that amount and put that on line 5A, and my partner would claim the other 50%. You won't have Canadian journalism. This is for partnerships and the GST rebates for partners received in the year. Again, this section here is if you have a partnership where your sales and expenses exceed $2 million. So don't worry about it. I'm going to bring that amount down, carry it over to line 5C, and then other amounts deductible from your share of the net partnership income or loss. So if you had any other amounts that you could claim as a partnership, you could write them off there. Your net income after adjustments, in this example, it's the same. And then if you have a business use of home expense, you would claim that here on line 9945. This example doesn't have it, but I'm going to show you how you would claim that. So just for this example, because we've completed it, we can now put our net income on our personal income tax, and we would put that amount here. So all we need to claim on our net on our personal income tax is our business self-employment gross amount and net amount, and then you can carry on. But you have to complete this form to be able to get those amounts. Again, you're using the program, it will automatically calculate that for you. So that's why I love doing it online. It's super simple. If I can do it, you can do it. Okay, so calculating business use of home expense. You can deduct expenses for business use of home expenses if you use your workspace in your home for the following conditions. It's your principal place of business, and you use the space only to earn business income, and you use it on a regular and ongoing basis to meet clients, customers, or patients. Note, you cannot use the business use of home to create a loss or increase a loss. If for whatever reason your business is operating at a loss, and this can happen the first year, a couple of years in business, you can't use the business use of home expense to create a loss or make that loss bigger. However, you can carry it forward to future years. So you definitely want to complete this section and keep track of your notice of assessment, because it will allow you, or it will let you know what percentage you can claim in 2023 if you can't use it in 2022. Okay, so let's say this is the example of our floor space. We have a main floor and we have a second floor. And on the second floor, we have a designated office space. And in this scenario, it represents 12.5% of the total square footage of the home. So we can claim 12.5% of business use of home expenses. So to calculate what those are, we go to part 7 of the form we've been completing. And what we'll need to do is keep all the receipts for heat, electricity, the insurance on our home or apartment, any maintenance, any mortgage interest, any property taxes. We want to keep that for the year or the months that we've been running our business and put those totals in here. Once we've added them up, we have to determine the personal use part. In this scenario, it's 87.5%. So the difference is 12.5%, which is what we can claim as business use of home expense. We carry the amounts forward and then determine what our allowable claim is, and then we would include that on part 5 if we have it, and we could put that in here. This scenario, they don't use it, so they wouldn't claim it, as I said, but if you're using business use of home expenses, absolutely claim that, because it can add up to quite a lot of money. So you want to claim this section if you incurred expenses that weren't part of your partnership statement. So what that would look like is, say you're in a partnership and it's a 50% partnership, you filled in the income, you filled in the expenses, you've claimed your portion. However, maybe you purchased some items personally that you used in your business. So maybe you purchased a laptop and maybe a printer and maybe a couple of screens, but you didn't put it through the business, but you're using those for business purposes, then you could claim that here. If you are in a partnership, Part 8, you would just fill in any details of your partners. Part 9, this is details of equity. Now, I've got a number of accountants in my family, and they have never filled this in for me, nor have I, and nor has Canada Revenue Agency ever come back to me and say, you know, what this is. But if you can, my understanding it's mandatory. All they want to know is what your business liabilities are, how much money you withdrew from the business. I'm just going to turn my audio off here and just. Okay, so my audio is now coming through my computer as opposed to the telephone. I just disconnected myself, so hopefully that will help out. Okay, so what I was talking about here is details of equity, Part 9. You don't have to include this. I have a family full of accountants, and they've never filled this part in. I suspect it is for Canada Revenue Agency statistics, but I don't know that for a fact. You can or don't have to fill in the section, but they're just asking you, what is your total business liabilities? What drawings did you take from your business in 2022? And what capital contributions in the year did you have? So again, I never fill this in. You can if you want, but Canada Revenue Agency doesn't really need that information. So basically, that is the whole form that you would fill in for your business portion, and then the information, just the gross income and the net income, gets transferred onto your personal. Again, if you're using the software that I introduced you to at the beginning, it automatically puts all the numbers where they need to be and makes all the calculations for you. So just a few areas I just want to comment on again. Common income tax errors made by small businesses. They may under-report income or not report it at all. So any income your business gets, whether it's cash or whatever, you need to claim that legally as business income. Some areas that businesses tend to overclaim is business use of home expense, motor vehicle expenses, utilities, meals and entertainment, and their capital cost allowance. So if you're not using the online program, which will help you determine all these numbers and fill in the appropriate forms, you'll need to read up more on that section in the T4002 guide. Sometimes people will overlook reporting of secondary or other sources of income. Say, for example, for your personal income tax, maybe you rent out a room. You need to claim that as income and such. Revenues that are not all deposited or may be deposited but not recorded correctly. So one way to safeguard that is doing a bank reconciliation every month, and it will point out any discrepancies between claimed revenue and any bank deposits. And then sometimes people claim personal portions of expenses that they shouldn't. For example, maybe they purchased in September a whole bunch of office supplies and school supplies for their kids, and they write that off all as business expenses. And maybe for whatever reason, Canada Revenue Agency decides to audit you for that year, and they see that you've done that. And they won't allow personal portions. So make sure that when you're claiming business expenses, you are claiming only the business portion.
I see a question. I'll get that back to that question in one moment. With regards to your receipt, you have to keep all your receipts for 7 years. And the reason you need to keep them for 7 years is Canada Revenue Agency can go back 7 years and do an audit on your personal or business income tax any year within those 7 years. So you want to make sure you have all the receipts and contracts and everything for business in case you're audited. Okay, I use my spare bedroom as a studio for creating items I sell. Can I deduct the percentage of this room? So again, you would, if it's used for business purposes only, absolutely. And if you would have to figure out the total square footage of your home, not your basement, but just the main living area. And if it's 2 floors, the bedroom area as well. And then determine what square footage or what footprint of the spare bedroom you're using as business, and you could claim that percentage of business use of home expense. Again, if you want more details or to see this again, you can review the recording or the slides or refer to document T4002. That's the real document you have to consult with, is because that's from Canada Revenue Agency, and they're telling you exactly what it is they want you to do and how they want you to do it. Other reasons for errors is expenses that are not supported with documentation. So again, if you're ever audited, Canada Revenue Agency doesn't have to allow expenses that you don't have receipts for. Travel expenses, a lot of people get into problems here. So for example, say there was a conference that I wanted to attend in British Columbia that was business related, and the conference was 4 days, and I decided to combine that with pleasure and stay for 10 days. So I got airfare and accommodation and meals and that sort of thing. So if I went for 10 days and 4 days is for business purposes only, I could only claim 40% of the airfare, and I could only claim 40% of my accommodations, and I could only claim 50% of the meals on those 4 days. So you want to make sure when you're claiming expenses, you're only claiming the business portion. And then no reasonable basis to calculate shared expenses. So usually if you're a partnership, you have a partnership agreement, and the partnership agreement stipulates how much of a percentage of the business you own. So you need that sort of paperwork to be able to claim only a percentage of sales or expenses. And then, just a general lack of tax knowledge, which most of us have, and or tax rules. So again, if you have a question, don't be afraid to reach out to the business advisor. If they can't provide you with information, like I said, most accountants will provide you with free information. And then the other thing I do, if I'm not sure, is I'll just excuse me, type it into Google, and usually a CRA document will come up that will answer my question. So again, just make sure if you're not sure, you get the information that you need from a reliable resource. Here's some websites and telephone numbers that you might need with regards to Canada Revenue Agency. I know I'm going a little bit over. I'll just be another 5 minutes if you want to stay on. If not, you will be receiving the slide deck and the recording. I will come live after the presentation. Like I say, I'll be another 5 minutes. If you want to stay on, great. If not, please feel free to leave, and I will provide you with additional information. Okay. So you can benchmark your business against other businesses in your industry, and it's great for providing insight on operations of similar small businesses in your industry, and this would be across Canada. It identifies area in which your business deviates from industry norms, and it can also help you identify opportunities to make changes to help your business grow. So for example, if you took a look at the performance data and you saw that a business in your industry spent 8% of their revenue on advertising and you're only spending 4%, you may want to consider boosting your spend in that particular area. So it helps you identify areas where your percentages or your dollar values are different from your industry. To be able to create the report and find your industry, you would just go to the website at the bottom. So I can see here, there's a question, just a question about the business in the home section. For all the receipts, hydro, heat, we collect, how should we handle them when the billing statement doesn't fall on the start of the month? So again, whatever month the statement falls on, that is the date that you would record that expense. I'm looking at one of my internet bills, bill date December 22nd. It's not going. Yeah, so you would report it for December 22nd. January 26, 2023 will cover the last few days, and you could just claim that in January 26, 2023. So whatever the date of the statement is, that is the date you would record that expense. So you're fine for income tax purposes. Those last 7 days shouldn't be worried, because you'll claim them in 2023. Okay, that is the end. I'm going to stop my share. Where's stop share? There we go. And I'm just going to bring on my video and answer any questions. So if you have any questions, please feel free to type them into the chat. I'm monitoring the chat. And if you want to put up your hand and talk to me directly, if you go to the reactions button at the bottom, and you can just click raise hand, a little hand will come up, and I can see you're wanting to turn on your audio and ask a question. So any questions? You will be receiving a copy of the recording, which I will stop now. And you will be receiving a copy of the